That's the question. Probably Bitcoin. All right. Crazy day yesterday, huh? Like a mad day. What a mad day. Oh God, what can I say? Um, I mean, I had a good day. So in the morning, um, we were all in shorts. Well, I was, but that was the short in the morning, basically. It broke that line, just went down. There was a long trade to be had here. I'll show you. Do you see this SFP line here? I didn't take it. The reason why I didn't take it was because I don't like catching the price, but it was a very viable trade to be had. I'll show you how you could have had it. As the price comes under, as it comes back above, that's the trade. That's the invalidation, and you have to take profit. As soon as the price came up, all of this was taking profit. You see these two green candles? You see the wick on top of that green candle? That's take profit. Let's take profit from everyone who took this trade. And the way it works is they will take profit so that even if they get stopped out, which they would have immediately, that the trade is still a profitable trade. So you have to take enough profit to make that trade profitable so that even if you get stopped out, you win the trade. That's the idea. So potentially anyone who took that trade could have taken at least like 75% of the trade as profit easily, and maybe even more if they weren't sure. And then the other thing that they could have done is they could have, once they took profit, they could have set their stop loss to break even. So if they would have caught it late, because it's quite difficult to catch a swing failure exactly as it swings. So maybe you come in late here, or maybe even you come in late here. Effectively, this is still your stop loss. As soon as the price comes up, you have to take profit. And then if you set to break even, you get stopped pretty much straight away. And that's the trade. You only attempt that trade one time. You don't attempt a swing failure on the same pivot 2 times. Okay, so that was the trade plan was correct, but it would only work if you took profit. That I had was this one here. You see this one? That was the other trade plan. The reason why I was interested in this trade plan was because of the previous bull market all-time high, and took the trade. I actually risked a lot more than I should have, just because I felt like it was a good trade to have. It was in a good place, and we had a really nice bounce, and I took profit twice on that. And I'll show you because I was posting on Twitter. Don't always post on Twitter when I'm taking trades, but sometimes I do. Yeah. There it is. So I had my shorts. I was posting my shorts. See, look. Longs. This is the second profit on the short, which was from the morning. So we did that together. That was the first take profit. That was the second take profit. And then I took the long. That was the long. No, that was the short. This is the long. See that? So you have to take profit. You quickly take your first profit, and then if it keeps on going, you can take your second profit, and you still have a little bit of a runner. I had a runner. Actually, my runner was quite big because I really positioned myself quite heavy, and I got stopped out. And I set it to break even as well. So I wasn't willing to take a loss on that trade. When I say loss, I wasn't willing to lose the runner as in loss. So I took no loss in the runner either. All right, that was that. That was interesting. And so what do we do now? We just delete everything and we start over. And we look for the next trade. So let's just have a look. Good morning, War. Let's keep those lines for now, but I'll get rid of the brush strokes because we don't need those. And then get rid of these trade plans. We don't need those either. Get rid of those. Long trade. Get rid of that as well. Get rid of these as well. It's amazing how that sell box really was the right place to sell that I had. I'll go with these. Any interesting things here? Potentially. I'll keep them. Put those over here. Just that one. No, get rid of that one. All right, so the most important line right now is this yellow one that I have. Bash, welcome. Good morning. He says, I would love to hear your thoughts on the Dtravel tokenomics. I'm going to talk about that. We're going to go through it actually together. If you hang around, we're just going to go through the whole document and understand it. So that's the most important line. This previous bull market all-time high. And you can see that it's reacting. Good morning, Shushab. He's saying in his country, Amir means rich. Which country is that? I'd like to know. I want to go there. I'm going to go and live in your country. So you can see there's a reaction here. There's some reactions. There's a reaction. There's a reaction. There's a reaction. Clearly, this is a very important line. And clearly, you can see that the previous bull market all-time high is reacting. Okay. So naturally, what you want is you want to get back above it. Okay. As a bull. Do you see how the price came up here and it couldn't get to it? That's called a front run. Okay. And the reason why you know it's a little bit of a front run is because the second time it tried to get to it, it tried once. Usually in the second attempt, it will go, but it couldn't get there. It just swing failured this little local high here, and then it just sold off. Okay. So that was, it just shows there's this quite strong selling pressure right now. And so we have a very important line now for the bulls to get across. And as far as I'm concerned, there's probably no longs to be had until we get above that line. Yeah, it's pretty obvious why, because it's reacting. And if you long now, you're longing into resistance. That's effectively what you would be doing. There's no real gain there. 2.5% potentially. It's a lot safer to wait for the price to get back above and then long. And at least then you're longing on support, potentially on support. And then if you lose that line after you reclaim it, then you have a really easy invalidation. Okay. And the most important thing is to know when you're wrong. Okay. So for the price to get back above that and then to fall back underneath, you'll know that you're wrong. And then if the price was to get back above it, then you could try again. You could try twice. But at least then you're not risking the chart. Like right now, if you were to long, it would be gambling effectively. And we're not in the business of gambling. We're just trying to take good trades and have a good risk to reward ratio based on our position. So in effect, I don't think there are longs at the moment. That being said, let me have a look at the daily chart. So that was quite a bearish daily candle yesterday. Did you see that? Even though there's a wick on the top, it looks like a hammer. If you can just ignore the wick, it's a hammer in the highs. That's a dragonfly doji. That was, I did say yesterday, I didn't like this candle. I said I wasn't fond of it. And look what happened. Yeah. So sometimes you do get these candle formations which aren't very strong. It was almost it was very trappy, this green candle. I think we needed to see a bit of a sell-off, and the reason why is because I can't see how we can go up without correcting. And so now the question is, how far are we going to correct? Are we going to correct? Well, let me just do a couple of things, right? This is the first thing. So we have a Fibonacci range, Fibonacci pull from this pivot low to the high that's been put in. That's an easy one. Then we'll do a couple of range pulls, volume pulls. Do it from the exact same pivot. So you can see now we're finding a little bit of support on the value area high from this pivot to the current price action. You see that? So that's quite interesting. The other thing I'm going to do it from this pivot here as well, just to have a look. Okay, so that's much lower down. I'll do it from here as well. Okay. I mean, 42 is the line in the sand, isn't it? Because you can see that there's quite a lot of volume here. See that? And it's quite high here. We've got quite high volume here. That was quite a long consolidation range. And on this correction, if it was a deep correction, like where we are, if we were to go down, then you're coming down into a very nice area for taking longs. You're coming to the 786 of this whole move. That would be amazing. Or even at the very worst case, the 886. That would be like the golden opportunity if the price came down to 42,000. A golden opportunity to buy. I'm not saying it's going to happen. I'm just saying that would be a golden opportunity. So you have this kind of trend line going on as well. See that? Potentially that's going to somehow hold the price. And what else have we got going on? Let me have a look at the higher time frame. Yeah. So you have a little bit of a SR flip as well on the higher time frame. You can clearly see it. Do you see this high here? You see this high here? Yeah. So potentially we're expecting there to be some kind of flip if the price comes down. But the other thing I had in mind was something else. I don't know if you guys remembered I was talking about it. It was on my other chart. It was the idea of a inverse head and shoulder. Let me see if I've still got the data. There it is, yeah. So what I was thinking of, look. It's like an inverse head and shoulders there. Okay. Now the thing about the right shoulder is it doesn't have to be big. It can be quite small. It doesn't have to be big. And then the other thing we have is we have this mid channel. Can you see that? So I'm going to draw that on Bybit as well, because I think that's going to hold the price a little bit as well, because you can clearly see that there was a reaction here and we've kind of gone through it, so it's possible it reacts. Let me just draw it on Bybit. Okay, so kind of roughly there. Just change it to white. Okay, so we can see it now. The other fib pool we've got is this bigger one. So I think this bigger one is actually more important potentially, just because it's the whole range. And then you can also do an inverse as well. Probably the inverse is going to be exactly the same. So from top to bottom, yeah, it's going to be about the same. So you can clearly see from the bottom to the top, the first big fib line is going to be the 236 at 51,000. Okay, we will have to lose this mid channel, yeah, and we have to see, because it depends on how bullish the price is. What if we just range here? And you have to think about the context. We're going into the halving month. Like within 5 weeks, Bitcoin is going to halve. So the output is going to reduce by 50% from roughly 6 to about 3 Bitcoin. Usually what happens in April is that people buy Bitcoin because the price of Bitcoin has never gone down in April. But that's the point, isn't it? Like, it's never gone down. So will it go down this time? Is this the exception? That's the question, right? The other thing that's never happened is that we've never broken the golden pocket before the halving. And as you can see, we've gone through the golden pocket. And we've made an all-time high. That's never happened. So I think the line in the sand, the golden opportunity is going to be for Bitcoin. If this was to offer itself, it'll be around here. That would be like the most amazing buy. Okay. And I'm not sure it's going to happen, because I think I'm looking at an SR flip here. It's just underneath the 236. I'm looking at an SR flip. And it's more of an area, isn't it? It's like there, something like that. This trend line is quite subjective, because you can take it from these lows here and pull it up. Which would be better, because you're taking the outside line. Or if you have a steeper line, there is a steeper line to be had. It'll probably be from something like that. I'm looking at the height, it'll be there, something like that. Yeah. So it's quite subjective, this trend line. And we'll have to see what happens. Let me see something else. I've got another idea actually. Sorry, I'm taking a little bit of time because it's not easy. Just mark that line off as well. Just rename it to previous range value area low. I'll put the value area high in as well. Just want to see what happens to that previous range. Okay. I think in my mind the first great long to be had is here, this SFP here. It's into this mid channel and it's the previous range value area low. I'd like to see what happens first there, honestly. Like, I mean, right now we're into support. You can see that we're into a little bit of support, which is this value area. And as long as there's no longs to be had unless we can get back above the bull market all-time high, the previous bull market all-time high. So would you short? Yeah, you could short, but how would you short? Well, you'd have to go back and back test that. I think it wouldn't be a crazy short though, you know, it'd be more of a, I mean, the short to be had was here, wasn't it? Or actually up there. And now that we're in the lows of this potential range, you could short, but where would your invalidation be? It would be back above this line, effectively. That's the short. But you really want to short, you'd want to short on a pullback. If you were to short now, that would be the short. I wouldn't do that. Personally, I would wait. I would wait for this. Or I'd wait for this to short. That would be the short to be had. If there is a short, it would be either that or it would be that. Just the SFP of this local high here and reacting off that previous bull market all-time high. That's the short to be had. At least then you have a small invalidation if you're wrong. I'm not talking higher time frame either, because if you're doing higher time frame, well, the problem is, look how far today's candle has expanded. You wouldn't short the bottom of an expanding candle like that. That would be that wouldn't be smart. Even if it goes down, you wouldn't short that. You'd wait for a pullback. So that's, if you want to short, that's probably it. I'd have to see the reaction before I decide if I'm going to take a little short, and it'll probably be a bit of a small short and then see what happens. And the long to be had is to get back above that, line. That's a really important line. Hold it as support. People will start getting bullish again. You can squeeze the shorts then. Yeah. So that's effectively what you're looking at the moment, the trades to be had. And then probably lower down, the really good one is down here, because you've got this mid channel and you've got the previous range value area low, and you've got like a swing failure as well, potentially a swing failure off this level here. Setting it up. You also have to remember that there is a bit of a higher SR flip going off here on the local time frame. This could just, you know, it doesn't have to go down. That's the thing. You have to bear that in mind. But this is a great longer, this one. Amazing long. How it looks. Yeah, look, the midpoint. Back test that midpoint, mid channel. That'd be nice. Flip it into support and continue going up. That's kind of where I'm thinking right now. This channel is a historic bull market channel. Look. So that's our first like major level of support. And you can clearly see, hold on, let me show you. You can clearly see how the price as we came up, look, you see at the bottom, resistance break, back test. See that? That was the bottom of the channel. As we came up, we went through it. Look at this. Back test. Perfect. So swing failure, that pivot into that channel again. That would be a really good long. I think that's really that's also, you have a little bit of confluence with a previous range of val. And I'm going to have a look at some other things as well, just to, let me get rid of all this now. It's irrelevant. Just to clean up the chart. I think you wouldn't be looking for lower right now because we're not there yet. And so the first kind of area of interest would just be to see if this mid channel holds, and then we'll see. Like, I wouldn't really be thinking lower right now because I think we're just correcting. I'm not like crazy bearish on Bitcoin at the moment. Does that make sense? Just because we made an all-time high, just because we've had a little bit of a failed auction, I'm not like crazy bearish yet because I think that was inevitable. Just put those back in. What did I do? All right, I'm going to put these in my short trades. Right, good. Got those. Yeah, this is what I'm thinking of. Could we go down an SFP this low here and go back up? Yeah, you could. It's possible. Just this local low. It's possible. Anything's possible. Could we swing failure this low here and just bounce there? Yeah, that's possible too. There's lots of possibilities here. But I think the trades to have are the swing failures, and then I think you just have to take profit. That'll be a nice one. Look, that's into the golden pocket from this pivot to that high. Let me do it correctly. There's one there, potentially. So there's a few longs potentially, actually. And then I would take profit. I wouldn't just hold them. I would really, honestly, I always say the same thing. Just take your profit. Move on to the next trade. There you go. But the one that I'm really interested in, this lower one at about 59,000. And then the other thing I want to have a look at is the market structure. So I mean, just because we're coming down now, higher low there, higher high. Did that change market structure? Yeah. It's kind of what happened here. Look, you see here, we were making higher lows, and then that was your lower low. But what happened was that the price just went up and it made a new high. So what happens when that happens is that these lows are insignificant now. So actually that's your low. That's your real low. That one there. So as long as we don't come underneath this low here, we're just looking for a higher low. Okay. So even though you have a market structure change on the local time frame, which I think we have, you look at the way the market structure is on the 30-minute time frame, you can clearly see that we were making higher lows. This is your lower low here. You're making higher highs. You made a lower high. This is your lower low. That was your lower high. See that? So you have higher high. This is your lower low. That was your lower high. And this is your lower low. So we've now changed our 30-minute time frame market structure to bearish. This is bearish market structure. So when that changes, you're looking to short the pullbacks on the local time frame, and that's just what happens. Now that local market structure is bearish, which it is, people are looking to short, okay, or sell. And you can see here from this high to this low, the price got above the golden pocket, lost the golden pocket, and it just sold off immediately. So people were looking to sell. They were just waiting for weakness. Weakness was losing the golden pocket after you claim it. Yeah, people weren't looking to long, they were looking to sell. That's what they were looking to do. Why? Because you made a lower low. That's what happened. So they made a lower low, the price came up, a lower high. The longs here were taking profit, and then people were looking to short, and they entered. Okay, so we're in kind of bearish market structure. Technically, if you want to change it again now in the current, I mean, really you need to get back above there, really up there. But you know, maybe you go up and you do this, you start doing that. But really you want to beat that high, because that was your lower high. Then into a lower low. This could be a lower high, because after this high we've made a lower low. This could be it. You know, it is possible. That could be a lower high. But it's also possible that we just go up, swing failure, and just continue. And then we have to see what happens. Okay, so there's a lot of things going on here. Even though the local time frame, the market structure is now bearish, that's fine. It's not a big deal. You got a nice daily level here as well. Let me just mark that off. Have I got that level? Yeah. It's a nice juicy level right there. we've come underneath this previous daily level. Where's my trades again? Yeah, so actually look, this one might be a good trade. This one here into the daily level. That's probably your first long actually. Look, see that? Golden pocket, daily level, swing failure this low, and you have the previous range, value area high, all in the same place. See that? Here, all there. And you're basically, what you're doing is you're just taking the liquidity from this lowest pivot here into the golden pocket, into the daily level. Easy entry. The entry is a swing failure of this pivot, and you can just take that. Opening low on that as well. Right. I think that would be a good long to have actually. I will take profit. I'm not like looking to hold this to the all-time high and see what happens. That's my mentality. Does that help? So we have a few local trades. If that one fails, it fails. You just look for lower. And then in the context of like potentially what you're looking at here, let me just hide that now, is a little bit of a continuation. Okay. You're looking how the potentially we're looking for a little bit of a bam, 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 you know, just all the way down there. The price is searching for liquidity, isn't it? That's what's happening all the time. It's always searching for liquidity. I think price action like this would be very healthy for Bitcoin, because what you effectively want to do is you want the shorts to increase. Now what we want is shorts to enter in, because that's how we're going to go up. That's how we're going to squeeze the shorts. And then once you squeeze the shorts, the price is going to start rallying, and people are going to start market longing with leverage and start pushing the price up. The other thing you want to do is you want to reset the funding fee. And so when I look at the funding fee on BTC, let me just quickly have a look at it. It's a bit laggy, isn't it? Went into the wrong site. Let me have a look here. Funding fee, Bitcoin. Should be there on CoinGlass. There you go. So Binance, I mean, it's still bearish, but Bybit is actually neutral. Look, neutral. Some exchanges are bearish, some exchanges are neutral. Look, BitMEX is neutral. You see where it's black? It's neutral. And where this is BNB, where it's green, it's bullish. So actually it's not crazy bearish at the moment. It's a little bit bearish, but not crazy. See here, Bybit. I don't know what the difference is. Bybit and Bybit. I have no idea. Here it says 0, but let me just have a look on my Bybit. Give me a second. Yeah, this is correct. This one here. It's actually 0.0493. So that's bearish still. What you really want to do is you want the funding rates to reset to neutral. And so until that happens, in the context of a local market structure change, in the context of losing the previous bull market all-time high, I think we're probably looking for lower. Yeah. And we're probably looking to see how the price reacts at these levels. You have the daily level there. You have a historic monthly level. But really what I would love is to clear the liquidity from this pivot here, this one here, and just kind of another back test of this channel. And then maybe we'll see some kind of ABC correction here over the next few weeks, maybe. And then let me just kind of bring my EW. Just have a look at that again. Is that the end of wave 3? It was just above a 1-to-1, which is good because that means the 3 was bigger than the 1, which means the 5 can be bigger. I don't really see, I think the 5 is going to be crazy, by the way. I think the 5 is going to be nuts, personally. Just because, just do. And actually, this is only the wave 3 of 3. And this is what I'm saying, look. We've had the 1. We've had the 2. We're in the 3 right now. Okay. And in the 3, there are 5 waves. So every bullish impulsive wave has 5 waves. That's how it breaks down. Every corrective wave has 3 waves, A, B, C. Okay. So you see this blue one? That was the higher time frame 1. Then we had a higher time frame 2. Now we're in the higher time frame 3. We're still in the 3. Okay. It's just that the 3 is broken down into 5 waves. That was the wave 1. This is the wave 2. We've now just completed the wave 3. We still have a 4 and a 5, and that will complete the 5. All right? That will complete the 5. According to the trend-based fib, the 3 was bigger than the 1. So that means, because it was above this 1-to-1, you see that 1 mark? It just got above it. So we just beat the 1 with the first wave, which is good. Because that means if the 3 can't be the smallest, just because the 3 is beating the 1, that means the next 5, which is going to be the wave 5 of 3, can be bigger. Yeah? Can be bigger. And that would complete wave 3, the higher time frame wave 3. Then you'll go into another corrective, and then you'll have the last wave, which is going to be which I think probably will be the crazy one. That's what I'm thinking right now. A crazy wave 5. When I say crazy, I mean crazy numbers. I don't mean crazy in terms like, obviously, as you can see, the most expansive one is looking potentially could be the 3. But in terms of numbers, people are going to go mental if Bitcoin starts hitting 200 plus. Even though it's going to be less expansive, people are going to go crazy. So right now, what I'm thinking is a corrective. We're in a little bit of correction. And maybe it's going to be roughly about the same time as this correction here. So let me just see roughly what the correction here was. It was quite longer. It was like 3 months. We're going to see a 3-month correction. And this correction here is quite interesting because even though the one ended there, it still went and made a high. Yeah. And it put people off. So if we copy this fractal here, that's really going to put people off. Let me do it from here. What do you think? And that would mean that would work out well because look, by the end of April, what's that? Can you imagine if we go up come down, work our way up, another all-time high, then people get really bearish, and all we're doing is just coming back down roughly here, back testing that mid channel for an explosive launch. Right. Good morning, Cactus Cake. War is asking, can you explain to Rebecca how you take 1%? How it works? I'll show the video later. I will explain, but I'm not going to explain right now. I'll have to do it in a stream. I'll have to do a special stream just to explain how to trade 1%. All right, I've got this fractal idea just based on this too. Let me just do something else quickly. I'll just do a little fib time as well. Not fancy. I'm not amazed by that. Let's try this one. Just do it on the weekly time frame. We're done. Just hide them. Just hide that one. I'm not sure about fib time at the moment. Let me just hide these a second. Let me do something else for a second. Hold on. Man. All right, it's just messing about. Any thoughts, anyone? This would be nice. So look at this fractal. It doesn't look bad, huh? We range. If we kind of range here a little bit. There. Fake out. Down. Up. down, all the way down. I like that fractal actually, to be honest with you. Let's see what happens. Right, we'll just keep it in mind. At the moment, getting it back above the previous bull market high is a long opportunity. Losing it is a short opportunity. And there's a long opportunity here. And maybe the price is just going to kind of range a little bit. Okay, that's kind of what I'm thinking. I'm not thinking it's going to go to zero at the moment. And then the other thing you can do is just, if you look at the volume area of this previous range here, until we lost it. See, look at where the price is holding now, the point of control. So we're just back into this range. Effectively, that's what's happened. We're just back into this range. Yeah, you see, if you just take it from where the price comes up into this channel to the current price action, so you pull the whole volume range, we're at the point of control. But if we do go down to where I'm interested in, that's also the value area low of this new range pull that I've got. See that? Which is also coinciding with the previous range value area high and this golden pocket, and you have a swing failure for the entry. So maybe you just add the fractal to it, and that could be good. That could be a good trade. And then maybe we just potentially range in this lower part of this range rather than just go down. And then maybe we do go back up, you know. How many days would that be on this fractal? All the way to April. I think that's the best case scenario for all of us. And I'll tell you why. Because we all want the alts to pump. And for Bitcoin to fall into this range now and be locked for the next few weeks is the best case scenario for altcoins. Right? And all we need now is for Bitcoin to find support. So if the Bitcoin goes down here, finds support, and then just starts going sideways, that's paradise for all of us. And that's kind of what I'm imagining right now. I'm not thinking the price is going to crash. So let's just see what happens. And we'll know. The reason why we'll know is because we'll just see how the price reacts at this area of interest that I have now, which is the bottom of this new value area which I've pulled. If the price reacts well and holds, you know, and what I'm looking here potentially is it goes down, it goes back up to the point of control, it comes back down, makes a higher low here, and it just continues up to the previous, and you know, and you just have this, you know, you see that? That's what I'm thinking. Just this fractal basically. All right, is that clear? Any questions, anyone? Everyone's been so patient. Messat, hi. Bash. All right, Cactus, yeah, Shushan. I don't know if anyone's here because I can't see. Doesn't tell me. All right, I've set my alerts, and then obviously if I take a trade, not always, but I'll post it. Let me just quickly have a look at XO charts as well, just to see. Yeah, the liquidation bubble there, that's good. You want to see liquidations. You have two liquidation bubbles. You see in this down move here, there was so much liquidation, liquidation, lots of liquidations. I'm not seeing any bullish divergences in this move, downward move, okay? But the reason why is because the CVD and the price are following the same path. Lower lows, lower highs. So I can't see any divergences right now. I think that will be a good indicator to know when to start long-term buying again. Once you start seeing higher bullish divergences, you can start thinking about buying again. But there are higher time frame divergences. So if I go in the 4-hour chart, this is the 4-hour chart, you can clearly see that CVD is lower, the price is higher. Okay, So on the local time frame, there's no divergences, but on the higher time frames, the medium to higher time frames, you can clearly see that we're experiencing bullish divergence. It's a lower CVD low and it's a higher price low. See that? Higher price low, lower CVD low, but this is a higher time frame. It's just something to bear in mind that the price has been significantly absorbed, and so I'm not expecting the price to fall crazily to the floor, because there's been quite a lot of absorption of the selling. But on the local time frame, I'm not seeing anything. All right, and that will be usually it's a good signal on the local time frame as to the direction of where the price is going to move locally, is if you start seeing some divergences locally. All right, so that's kind of Bitcoin. Quickly have a look at ETH. And okay, so if BTC is kind of going side, it fell a little bit, but it's going sideways. Bitcoin dominance now is kind of going sideways. Nothing really to report. It fell a little bit and now it's going sideways. That's also a sign, like if Bitcoin suddenly gets weak, yeah, you'll see it on Bitcoin dominance. If there's a panic, you'll see Bitcoin dominance suddenly go crazy up. You'll see this. There's 2 times where you see Bitcoin dominance go up. It's when Bitcoin is extremely bullish or when there's extreme panic in Bitcoin. And then you're not going to just see small fluctuations like this. You're going to see this, like that, explosion. And then when that was panic, wasn't it? Look, you see that? Wait, where is it? Where was panicked? September 22. Look, you see that? That was panic. You see that big candle? And then this was January 23. This was bullishness. That was explosion. So you see the 2 times when you go up is either panic or when Bitcoin suddenly becomes bullish again. Look, November, look how it just goes up like that. That was FTX and everything. So it's just kind of going sideways right now. You see how Pax gold against Bitcoin? It's quite interesting, huh? You see how we came into, look, you see this? I drew this yesterday. We came into support at the value area low, and look, prices just bounced back up. How many percent? 8% against Bitcoin. Gold is up 8% against Bitcoin. And gold, actually, the price of gold hasn't moved. So if anyone was trading PaxG and Bitcoin, they could have just bought PaxG and they'd be 8% up against Bitcoin, just because gold hasn't moved and Bitcoin has. Look at that. So the line of interest is this one here, this SR flip here. And then worst case scenario, we have this mid channel, but I'm hoping that we don't go underneath this previous high. So even though I've got that line drawn there, let me get rid of it. I am hoping that on the total crypto market cap, we just find support. All right, there'll be a little bit of pullback on the total crypto market cap, potentially of about 10%. I think that would be a really nice confirmation to get an SR flip on that previous high. Worst case scenario, you're going lower, but then you have another SR flip into the bottom of this channel, potentially. All right. Just quickly have a look at Bitcoin again one more time. I will long there. I like it. I like that long. But I'll wait for the reaction. I'll wait for the swing failure pattern. Okay. Hopefully it'll happen today because I want to long. I want to do something because I'm not in a trade right now. So apart from, of course, the trade of all trades, the only one that matters